Good evening, everyone. Good evening, ladies and gentlemen. I hope you all having a great time so far. Thank you, Alex, for the introduction earlier. So, guys, today we will talk about strategies for day trading as well as swing trading or price action trading, as I'd like to address it a bit better, because some traders, they believe that swing trading is something um, not worth looking at it, to be honest, but it's really something helpful, especially for a beginner trader. It gives the trader time to understand the nature of the market, and it's really helpful. So we will explain everything here. But before we start, just to make sure that everyone understands that this content is for general information only and is not intended to provide trading or investment advice or personal recommendations. Now, for those who join us for first time, allow me to introduce myself. My name is Theo. I run the Market Minds Mastery. It's a trading academy and also service providing. And as per my expertise and experience, I'm a certified financial technical analyst. I hold certifications by the International Federation of Technical Analysis and the Society of Technical Analysis in the UK as well. I have more than 10 years experience in trading. I love currency trading, to be honest. I specialized in currency trading. Currency correlation is something that excites me a lot, and especially this week with an on-farm payroll and all this surprising event happening in the world and in the financial markets, of course, with the cryptocurrencies are covering the run they didn't cover the last 2 years. So I create educational courses. On a daily basis, I published market analysis, and as well on the Telegram channel that I have for our, let's say, members and some people. It's a free one, by the way. You can come and join anytime. Yep, and we post there some ideas. So, what's today's agenda? First, we will start. Yes, we will start with how to trade the daily charts. Some people, they will think now, oh my God, Theo, what are you talking about? Are we going to trade the daily chart? How, when, where, why? Guys, if it wasn't for the daily charts, I wouldn't be here talking to you now, because I would have been out of the market, burnt, and not even want to think about the market. I often see many people, and allow me to say that, they come to the financial market and they try to learn how to trade on the 5-minute chart and 15-minute chart. And that gives them trading anxiety, if you allow me to say that, and it doesn't help them to develop their potential as traders. There are maybe traders, they really have skills and they can be developed as exceptional traders, but they don't last because they get confused. It's like there are so many things to understand to go down to the 15-minute chart. You need to give yourself some time to adapt. Okay, so I will explain you in 3-4 minutes how to trade the daily chart. If you won't try it, I will definitely encourage you to try it. And if you have any questions, please feel free, use the either the Q&A or the chat and text me. I already see people here like Mogiol raise hand. Mogiol, you can please write on the chat. Okay. Then we will explain how to trade the 4-hour chart. It's also a very good way to develop your trading skills. Okay, if you are the guy that needs to trade intraday, and needs to take trades on a 5-minute chart, 15-minute chart, don't worry about that. I have you covered here, and we will explain exactly step by step what to do. You just need to follow the process. By the way, guys, in all of these 3 trading, let's call them trading setups, I will give you A, B, C, D. You can go do this on here, this on there, and we're gonna walk through each and everything. And the way you think and trade the daily charts, it's totally different with the way you need to think and trade the 5-minute chart or the 15-minute chart. I often see traders, again, why I say all the time, I often see traders, because I provide coaching, one-on-one coaching as well. And I see trader guys, they try to trade the 1-minute chart, but they are thinking like trading the 4-hour time frame. That can't happen. Okay, it requires different mindset and different, and it has different expectations when you trade any time frame from daily to 1-minute chart. Mogiol said, I just wanted to say hi, Mr. Theo. Thank you so much for joining us, Mogiol. Appreciate that. And Diale said, hello, friends. Thanks for joining us. So let's get on to it. Trading the daily charts. Guys, you can take screenshots, you can write them down. These are steps you can take over and over and over and over again. Take 20 trades, take 100 trades, come back to me and ask me what, if you have questions or something, just try it, okay? It's gonna help you. So if you want to trade the daily chart, you first need to look on the monthly chart to draw the highs and the lows, or support and resistance. Now, we want to approach really trading from a mechanical perspective, guys, okay? So on the monthly chart, the candles, they go like this. Just put the high and the low as a reference. If you are if you read the weekly analysis, the weekly outlook we put on our blog, you will see how I draw the lines. On every single line, you have at the right the reference where this line came from. Is it a monthly high? Is it a monthly low? Is it a weekly? So you need to have the monthly highs and lows, or support and resistance. Why? Because you don't want to buy at the monthly resistance, and you don't want to sell at the monthly support. Simple as that. Okay, then we've done with the monthly chart. It takes us literally 30 seconds to go and put the high and the low of the previous month, or if we just surpass that, just the next candle, highs and lows on the monthly. Then we drop down to the weekly chart to identify if there is a trend, yes, a weekly trend, if there is any Fibonacci level sitting there, or any chart pattern like pennants, triangles, anything that can help us. Okay, this is going to take us, let's say, that's where the analysis will take place on number 2. And once you create a clear direction of where you want to execute the trade, either as a buyer or a seller, then and only then you go to the daily chart and wait patiently for a reversal price action. Now, write this down if you want. The best high probability reversal price actions we can find, and they work really well in the financial markets, is shooting stars at resistance levels, hammer at support levels, and bullish and bearish engulfing, bullish engulfing at support and bearish engulfing at resistance. These are your catalysts. These are the highest probability price actions you can look to trade. Now, let's have a look at an example, and that's actually something we were trading this week. Okay, this is the USD Swissy on the weekly chart on the left and on the daily chart on the right. Guys, please try to not look at the daily chart. If you will execute on the daily chart, don't look the daily chart while you do the analysis. Traders, they make these trading errors all the time. When you do analysis, you stick to that time frame, you do your analysis. Okay, now, but why to do that? Because if you start doing analysis on the weekly time frame, and at the same time, you try to understand the trend on the daily chart, you will end up trading always against the weekly time frame. And this applies to all time frames, actually. Okay, it's not a relationship between weekly and daily chart. I hide the daily chart for a purpose here. Okay, now even if you're going to trade, we're going to see later on, when you're going to trade the 4-hour time frame, if you and you want to do your analysis on the daily chart, if you start doing analysis on the 4-hour time frame, you will always end up, most of the times, you will end up being trading against the daily chart. Why this happens? Because when the daily is, when the weekly chart comes at an area of potential resistance, and that's where we want to be a seller. Listen to that, guys. Pay attention to this. One time frame below, it will be in a strong uptrend. So when you see the time frame you want to execute in a strong uptrend, you will start thinking, oh my God, what am I doing here? Am I going to sell? How is possible? All the market bias are up. But that's how that's how a higher time frame and a lower time frame trend works. Always we're going to have, and always these things happen in the market. So back to the example. On the weekly chart, the price from, we said first step is to look the high and the low on the monthly chart. Here is the high, previous month high, that's the resistance. Then if we start from the high to the low of this downtrend, we will identify the Fibonacci level of the Fibonacci retracement of 61.8% somewhere around this region. But guys, remember 2 webinars ago or 2 webinars ago, I gave you the checklist of what parameters do you need to look to trade the trends and to trade the ranging market. So we have, for those they missed the webinar or they don't know, they are new here, that's okay. We can reshare it again. Just ask here, because I don't know who wants it. So we can use the Fibonacci along with the resistance and some moving average, perhaps, if they are in alignment. Okay, we don't trade based on the moving averages, they are lagging indicators, but we use them in our advantage to understand better the market. So the weekly period moving average, it's the same as the 200 daily moving average. It's just 40 times 5. That's how it consists. So at this area here, there is a moving average that can potentially stop the price from moving upward. There is a Fibonacci level, the golden ratio 61.8. Again, parenthesis. You're going to see many people on YouTube that they are using they come up with different Fibonacci numbers that they are, you can say, there is a 90% Fibonacci ratio. Okay, but there is no such a thing on Fibonacci numbers, for example. Okay, the golden ratio, it's this one here. So we try to get the area and the price around this area, this Fibonacci number. Okay, it gives higher probability trade setup. So price comes here. Our job ends on the weekly chart. We are done. We mark this and we go to the daily chart. On the daily chart, we look to execute the trade. We don't look for further analysis on the daily chart, guys. We are on the daily chart to execute the trade. We are here to press the trigger. You're going to start messing around with your mindset, with your trading psychology. You're going to come up with ideas and plans that they are not on your checklist, perhaps, to look at this. And you're going to start giving excuses to yourself why not to take the trade or why to take a trade that it's not planned. Just keep things crystal clear and simple. There are three on each trading setup. There are 3-step process. For example, trading the daily chart. You go on the monthly, you put the high and low support resistance. You go on the weekly, you do the market analysis. Do I have a trend? If there is no trend and if there is no range, forget it. We move to the next one. And you go through markets fast. You identify tradable opportunities. You add them in your watch list, and then you go to the daily chart and you wait for those 3 price action setups to appear. If they appear, we confidently press the trigger. Okay, it's nothing more to do. So that was a shooting start. And if you check also at the block, let me show you here, guys, because these blocks, we do it for you, and the purpose is to help you in your trading. Allow me to change the screen just for 30 seconds, then we'll be back. So it's, where is it? It's this one here. So guys, the Trading Pit website, you go where it says tools, you go to the block, and here where it says market outlook, you press and you read everything. I write this every single week. I give you all the news in the way that you will need them as a trader, not as an analyst or as an economist, but as a trader, what you need to be aware of, why you need to be aware of, what's the expectations. I give you some fundamental trading setups for those who might be interested. You can combine them with your technical analysis. And then I give you the analysis on what to expect to happen in the market. And especially if you go through, guys, and you read, and you see here on the right, how do I put you the levels? Everything, it's so crystal clear. Everything, it's simple to read, understand, and know what to expect. Okay, so that was the USD CHF on the daily chart. As you guys see, we had this area here. It was a cluster, and the price played around for a while, and then it moved downwards. Most of the analysis was to favor the seller side because of the higher time frame thing. Then on the USD Japanese yen, we explain about this range here. Now the price is finding some support around the bottom here, and everything. You can scroll down. For example, on the Bitcoin, we gave this 4-hour chart pattern. That's the bullish pennant. And the price within a day, it reached the minimum price target. Okay, everything very crystal clear, and trust me, it's what you need actually in trading to learn how to trade, to learn how to read the markets, and many, many, many more benefits. Okay, I'm sure you can understand them. So let's continue. And we are here. I hope this is clear. Any question, guys, on this method, how to trade the daily chart? Now, some tips on trading the daily chart. First, always ensure to look for trades at the around the monthly levels of support and resistance. They give you the highest probability in trading. These are the if price is going to turn aggressively or it's going to break a level aggressively, most likely it does it on a monthly levels. The second, understand that the price action on the higher time frame, the higher the time frame you look at the price action, it tends to be a bit more reliable because it doesn't get affected by the intraday volatility. Just find, let's say, on the 1 minute chart, shooting stars at resistance of 15 minute or 30 minute, and then find the same shooting star at resistance of the monthly chart. It's going to be a significant difference on these two probabilities for positive outcome on the trade. And the third insight from me, guys, it's because price takes longer to develop, it gives the trader the time to understand the market move. It gives you the time to learn while you trade. You can't do this while you trade the 1 minute chart or the 5 minute chart because your mindset is focused on that price fluctuation. You see 20, 30 different candles changing on a daily basis. Whereas when you trade the daily chart, you can monitor 20, 30 markets, as many as you want, because you are looking for those specific parameters, and you become more patient, you understand more how the market moves. It gives you time to digest the price move. Let's go to the 4-hour time frame. Highly encourage you to use time frame correlation with the weekly chart. If you missed the webinar we did on time frame correlation, please go to the YouTube and it's there. On the weekly chart, what do we want actually is to draw the levels of support and resistance. What did we do on the monthly chart? We're going to do it on the weekly chart, guys. Okay, so you can also, I like always to put the monthly high and the monthly low on my chart. Even if I'm trading the 15-minute chart, the 4-hour chart, it doesn't matter. Always when the price comes to meet these monthly levels, the high and the low, it reacts, okay, 99% of the time in any time frame. So along with the weekly highs and lows or support and resistance, you can just keep the monthly there. Doesn't make any, doesn't cause any issue. Then we go on the daily chart to identify the market structure, like if there is a trend or if there is a range on the daily chart. Now, what did we do on the weekly chart before? We're going to do it now on the daily chart. And once we identify the market structure, we want to look for an order block. If you don't know what is an order block, I'm going to do a webinar. It's going to, in my opinion, it's going to be the most exciting webinar. It's going to be the next week's webinar, okay? Because I will explain you how to trade the order blocks. Some people know the smart money concept, but because I have very good understanding of the overall analysis and market moves, I will introduce you this concept here, and you will transform, trust me, you will transform your trading. Transform, guys, no kidding. So ensure that you are here next time. And for those that are going to watch it on the YouTube later, please make sure, make yourself available also for the next webinar. Now, once we decided on the daily chart in which direction we will trade, then and only then we go down to the 4-hour time frame to do the final procedure for the execution. Guys, we don't want to, if you find yourself doing analysis / paralysis on the time frame you will execute the trade, trust me, something is not right. Just go back to your time frame that you're supposed to do your analysis and rethink your process. Okay, the reason I give you all the rules, guys, and I encourage you to write them down or take screenshots and put them in front of your screen while you are doing your analysis, so you have that structure of 1, 2, 3, 4. I don't like to give you I can give you 15 parameters to tick the boxes. I'm not saying it's useless, but it brings confusion that it's not necessary. Okay, so here it's crystal on Monday. I'm saying on the weekly chart and on monthly chart. Just put your levels: high, low, support, resistance. That's it. Then on the daily chart, identify: is this market trending? Yes. In which direction? Okay, it's an uptrend. So I would like to be a buyer, right? And where I want to be a buyer, where ideally in an order block area, which I will explain you more about that on. I will introduce you to that concept, of course, today, but I will explain you more next time. Then you decided on the direction, go down to the 4-hour chart and refine the order block. You will make it a bit narrower, a bit smaller. Okay, so you get better reward to risk. That's the whole idea. And you can enter the market with limit orders or to wait for a price action reversal in that block. Now, how do you know? Question from someone maybe, hey Theo, how do I know if I have to press a limit order now or if I have to go with a price action reversal? Now, if the weekly price action or the daily price action, perhaps, they confirm the direction you will take the trade, it's okay to place limit orders because you are trading with the momentum of the price action on that higher time frame. But if the weekly or the daily they are approaching the level and you want to take the bounce from that level, then definitely you need to wait for a confirmation of the price action. Okay, is that clear, guys? By the way, feel free to write anything you need on the Q&A box or on the chat, whatever it is here for you. And an example here, that was I think we took last week this trade here, and it was actually on Monday, because on the daily chart we identify, this is the crude oil. On the daily chart we identify that here it was a range. That's the high, that's the low. And price created this area of strong support. And on the 4-hour chart, we identify this order block here. Okay, price made here the equal low, and it moved upward aggressively with a bullish engulfing. Guys, on the analysis you will read on the the week ahead market outlook on our blog, you will always read bullish engulfing block, bearish engulfing block. That's how I address them. So you understand it's a bullish order block or a bearish order block, okay? But I like to address them as bullish engulfing and bearish engulfing because that's the only order block setups that I'm looking for. So price on the 4-hour chart, so on the daily chart, we identify we want to buy at this area here. Then on the 4-hour chart, we identify this order block that we can take advantage of that, we can take advantage. So price enters here, we can place the limit order, or some traders, they feel that they don't, regardless, we say if the daily price action agrees or the weekly, whatever, some traders, they still need to see that confirmation, which is totally fine, and I get it. And I encourage you to look the markets and the charts the way it helps you to take the trade and it creates more confidence. So some, I think it was some hammers here, some bullish hammers, some bullish price action, and then the price took over. Okay, and yesterday again it was another bullish setup on the 4-hour time frame that it just played out today on the crude oil. So we were still looking for bullish there. Okay, but we don't have time to go and do that type of analysis. So on the 4-hour time frame, some tips: ensure that if you're going to choose the daily order blocks, they must be clear and they must give the direction, they must create the direction. The second thing, make sure that the order blocks on the 4-hour charts are unmitigated. Okay, we prefer to trade the first time that to take the first trade within that order block. Now, it's not always the case, but if we can get the first one, it's more beneficial, of course. Okay, like another trade we took today on the USD Canadian dollar, it was a sell. I think I have the example here. No, it was a sell trading setup, and the price entered into that order block twice. But we took the first one, we were there, price fluctuate, stayed there for a couple of days, and then took over. And again, today, that one played off. Today, I think I had two winners, the one on the WTI and the other one on the USD CAD, and I think I'm having one losing trade on the Euro Australian dollar. So, yeah, that's the today's outcome. If there is a price action reversal on the weekly or the daily chart, as I said before, it's okay to use limit orders for the 4-hour time frame. Otherwise, better to wait for a reversal price action in that order block. And for stop placement, you can use the daily ATR. For example, the average true range for the example we saw earlier, USD Swissy, CHF, today it's about 60 pips on the daily chart. We can go with half of that stop placement on the 4-hour time frame. Okay, we can go with 60 pips, or we can go with the half, with 30. Usually 30 pips, half the ATR of the daily chart. It's very, very, it's okay. Now, how to go down to the 5-minute chart, how to trade this 5-minute chart, guys. You can trade the same, the 5-minute chart, 15-minute chart, okay? Doesn't make that much of difference. Now, before we proceed on that one, please understand that trading the lower time frames like 5-minute, 15-minute chart, you must stick to only a handful of currency pairs or markets. You don't have the privilege of not trading mindset, but the privilege of response to, if you monitor 10 different markets and you're trying to enter on 5-minute or 15-minute time frames, you're going to start losing something from the equation, okay? Because the information is too much and you need time to be focused. The price action on the 5 and 15-minute chart, as you already know, it changes every 5 or 15 minutes. So you need time to understand and to explain that information for your entry points. So mark the daily and 4-hour support and resistance. If you want to mark only the 4-hour, I will definitely encourage you also to mark the daily, because the 5-minute chart and the 15-minute chart, once interact with the daily support and resistance, it's going to create some fluctuation. And let's say you are it happens all the time. The price moves upward, okay? And the daily chart high is here. And then you go to the 15-minute time frame or 5-minute time frame, and you see a nice bullish uptrend. But at this area of the daily resistance, the 5-minute or 15-minute can create a new market structure, can create a lower low. And if you have a tight stop loss, 5, 10, 20 pips, maybe it's going to take you out before it's going to continue moving upwards, because it takes some time to overcome the daily resistance. It happens over and over and over again in the market, just as an information. Then you can check the daily price action and keep it as your leading indicator. Why? Because the daily price action, it's perhaps what's going to lead the following days trading activity. If there is a shooting star at resistance, we estimated that the next day, most likely, the sellers will be more active than the buyers. It's not always the case, but again, we try to create high probability scenarios in trading and trade this. Okay, guys? Then on the 4-hour or 1-hour time frame, you can check both. It's fine. Check for an order block in the direction that you already decided you're going to trade. Again, it needs a bit more detail to trade the lower time frames. It's not like on the daily chart. Remember, we put only the monthly high and low. We go on the weekly and we check, is there a trend or a range? Yes, the area we are interested is here. Okay, I go to the daily chart. I'm waiting for this price action. Here, it needs a little bit more detail. We need to be a little bit more specific, because the stop loss on the lower time frames are as well more tight. So then once we identify and mark the order block in the direction we decided we want to trade from the daily chart, we wait on the 5-minute or the 15-minute for the price to enter in that order block, and afterwards we wait for the price on the 5 or 15-minute to create a new market structure, which we're going to see, of course, next time. Okay, by the way, this webinar and the webinar for next time, they are not, it's not a series of webinars, but we can't put everything in one webinar. Okay, the time, it's not, it doesn't allow us to do that. So on the 5-minute chart, let's say the market is in a downtrend and the price hits downwards on the 5-minute chart. But on the daily chart, we decided that we're going to be a buyer because the major trend is up, the price action is bullish, and we want to be a buyer. So we want to enter on the 15 or 5-minute chart. After we completed our steps here and we identified, let's say, the order block area we are interested to buy. On the 5-minute chart, we wait for the price to tap into this area, and we wait for the price to create a new market structure, either a higher high. And we have 2 ways to enter, like I write them here. The first way to enter, you can enter after the new high occurred. You can enter on the 61.8% retracement, Fibonacci retracement. Okay, for people who know trading patterns, always this trend reversal, it's going to be the inverse head and shoulder pattern. Okay, or the other thing, if we identify that a strong area of support of that 5-minute chart is being retested, we can also take the trade. But it's better to keep it simple and stick to the 61.8 Fibonacci. Okay. Now, some points for intraday trading. When you want to start trading on the 5-minute or 15-minute chart, guys, you have to understand that during London session or New York session or during the overlap, the liquidity is more compared to the Asian session. So if you live in somewhere in Australia or in Asia, and you have the option to trade the London session because the New York session is a bit later, yes, it's going to be definitely more advantage to trade this one. Now, it's better to stick to the major pairs with high liquidity because they kind of having more reliable setups. Okay, I wouldn't go with Euro, Swiss franc, or Euro pound, for example, or any kind of exotics to trade these 5 minute and 15-minute time frames. Okay, because of the liquidity, because of the spread, it's a very, very, very important thing. Trading major currency pairs with low spread, it's a key aspect of intraday trading. We avoid pairs like the Euro New Zealand, the Pound Australian dollars, where on average they have about 6 to 10 pip spread. Imagine to go on a 5-minute chart with 20 pips stop loss, and you need only 6 pips to cover the spread. That's not favorable. Executing only one strategy is crucial, as many candles and trends, they will be developed on the 15-minute, on the 5-minute time frame during the day, and you want to be calm and focus only in one thing. When you trade the higher time frames, you have the privilege of time to analyze a bit more, to take different trading styles, to do different things. But when you trade intraday, you must stay focused only on one execution mode. Okay, just do one thing, master it, and if you need to add something, then go for it later. Now, the mindset, in a nutshell, you need to acquire for trading these different time frames. You have to accept that if you trade the daily chart, you will take fewer trades, but you can trade more markets. You have to accept that you will be in the trade for a longer time compared to intraday trading or 4-hour time frame. You can trade trends, range market, trend reversals as price changes daily, so you have the time to objectively take decisions. And fewer trades can be equal to risk more on the trade because you have more, in my opinion, solid structures there. For example, if you are risking, if I'm risking on a 5-minute and 15-minute chart, let's say on the challenges 0.25 or 0.3%, okay, when I trade with a daily chart, I can go up to 0.75. I can go half is minimum, 0.5%. Okay, because it's fewer trades, and we have the privilege to do that. Whereas intraday trading requires fast decision, therefore one trading style is more than enough. Remember, always on a high liquidity market with low spreads, more trades equals to more opportunities, which equals to more losses as well, and equals to lower risk per trade because we take more trades. When trading the 4-hour time frame, it's a kind of combination in between these two. Some traders, they want to monitor each 4-hour session, and that's okay. And you have to accept that you will be in the trade for a little bit more more time. Okay, now I would like to, just for the end, I would like to let you know that finally Market Minds Mastery launched its website, so you can find us here. You can read who we are, and you can read some of the feedbacks of our clients. We coach them. And guys, here under Trading Education, feel free to join our daily market analysis we do. And also, if you need one-on-one coaching, you can book a free 15-minute introduction session so I can understand You will speak with me. I will understand where you are, what do you need. And because I like clarity and we are here to help traders. Price, it's extremely reasonable. We want to help each and everyone to start. So feel free to book whatever it's more suitable, you feel it's more suitable for you guys. Okay, trading courses will come soon. Trust me, get excited, because the course I'm writing for trading, combining all this accumulation of knowledge with the chart examples and everything, it's going to be very, very beneficial. And by the way, for those who are going to be here next time, we're going to primarily use the chart instead of PowerPoint, because it has to be a little bit more, I want you to learn and apply. I don't want you to learn and understand only. I want you to apply instantly. So we're going to be more practical next time. Okay, guys. So I think that's all for me today. Alex, if Alex is here, if Alex can hear us. Yes.
Yes, of course.
Okay. So for me, it was again a privilege and pleasure to host this webinar, and I hope you guys found some value out of it. Please go out, try, execute what you learned today, because that's the only way to learn and find out what resonates with you and with your trading beliefs, what you believe, who you are as a trader. So go out and try this. Yep. And I would like to say again, thanks to everyone, and looking forward, yes, for the next webinar. It's going to be a no-brainer next webinar. Absolutely. Absolutely.
Great. Theo, thank you very much for your time. Thank you very much again for today. Again, great reminder for next week's webinar. It's going to be the last of those series. And as we said, everybody, it would be great to be there. So thank you very much, Theo. Thank you very much, everybody, and have a good night.
Thank you. Bye-bye.
Bye-bye.